I think there is another factor, and that other factor is probably to join those dots together, is to say what is maybe in the background here is that one of the reasons the Federal Reserve is easing, and the timing of that easing, is not just the fact that inflation has been beaten. It's probably also a more general factor, which is that they want to try and get the US dollar down. Now, a strong US dollar is a negative for global liquidity. It puts a lot of pressure on foreign economies, particularly through the exchange rate. So if the dollar is strong, other countries are struggling to keep their currencies really in line with the US, and therefore they have to tighten monetary policy, or at least they can't afford to ease too much. And China and Japan have really been in the forefront of that. In actual fact, if you look back to a date back in 2016, there was something there that came out of a G20 summit, which was the so-called Shanghai Accord. Now, the Shanghai Accord was not a formal agreement. It wasn't in the media, or at least it wasn't in the media at the time. It subsequently sort of appeared in terms of rumors, and this is what many journalists are suggesting actually went on at Shanghai in early 2016. And it was really an accord to try and make sure that Asian currencies remained stable against then what was a strong US dollar. Now, lo and behold, they did. And if you look at the period from 2016 right through until early 2022, there was a remarkable degree of stability across Asian units vis-a-vis the US dollar. And monetary policy was generally tightened whenever the US dollar got too strong by these Asian countries. Now, that was a liquidity sapping event. It wasn't bullish for liquidity in the global economy. It was overridden, as we know, by the COVID crisis, but nonetheless, that was in the background. And the problem is that it's been putting a lot of pressure on both the Japanese and on the Chinese economies, China in particular. And it's caused the Chinese to tighten monetary policy unduly, which is the reason that the Chinese economy has never really lifted out of the COVID troubles. It's always sort of stuttered or spluttered in the wake of that. And that's largely because the PBOC has had tight policy. Now, the reason for citing this, and the reason for examining the reasons why we may be getting a weaker dollar now, is that perhaps there was some renewed accord or agreement done between the Americans, the Japanese, and the Chinese. There may have been some quid pro quo, perhaps, and we don't know what that is, but it could have been related to the US Treasury market. It may have been related to Ukraine, support for Russia, who knows? But something has been done, I suspect, which is why you've seen the US dollar actually begin to weaken quite noticeably over the last few weeks. So much so that if you look at the DXY, the trade weighted index, it's come rattling down from about 106 to now almost 100. I think it's going to go lower. I think it's going to test 95 at least. And that is, a meaningful, perhaps a 10% or so devaluation of the dollar on its trade weighted index over that period. Now, the backdrop of that is if you're getting a weaker dollar, you get two factors which really come in as well. Number one is that it gives the ability to foreign governments to ease monetary policy as well. And the other thing it does is it basically boosts the attractions of what we call monetary inflation hedges, which are things like gold and Bitcoin. So you should be seeing generalized easing through the world. And you should also see these monetary inflation hedges like gold and Bitcoin starting to make new all-time highs. And that's the backdrop we've got. Now, whether this is parallels a previous instance where the Americans wanted to get the US dollar, a strong US dollar down, which was the 1985 Plaza Accord, who knows? But it's certainly treading in that direction. Even if it's smaller in scale, I think the direction counts. So I would suggest that this is a weaker dollar and stronger liquidity environment that is coming on top of what we know are rate cuts in the wake of some success over global inflation.